So this now, the latest Experian Business Debt Index shows that SA businesses are showing signs of resilience and adaptability in the face of a challenging economic environment. Now, this index gives an idea of the health as well as of the business, for example, and the state of the country's economy. So let's delve deeper into this index now with Jaco van Jaarsveldt, Experian's head of commercial strategy and innovation. Jaco, thank you so much for your time. I mean, we've seen businesses going through a number of challenges in recent years. For example, you're thinking about the impact of the pandemic, but also the rising cost of living. But I see the index is saying that the fact that interest rates remained stable for the better part of 2023 also helped businesses somewhat.
That's correct. And thanks for having me. You're absolutely right. From a small business perspective, when you consider the challenges faced by small businesses, it's very similar to the challenges faced by consumers, which is high cost of living, high interest costs, therefore debt servicing costs, etc. But what businesses in South Africa, especially the small, medium-sized businesses, need is a level of stability. And when we look at 2023, even though interest rates were significantly higher and at the highest levels that they've been in many years, they were stable throughout the year. And similarly, we didn't see any movements in that in interest rates. We also saw that in the fourth quarter of last year, there was a level of stability in the supply of electricity, and then the backup of the supply chain that was at the harbours from a Transnet perspective also dissipated. So we saw more flow of stock and product to the small businesses. And the real thing for a business is, as long as there's a level of stability, they can manage their business effectively. And that's effectively what we've seen in the numbers. Mm-hmm. We're not seeing any positives coming from an economic growth perspective, even though the fourth quarter was positive compared to the third quarter negative growth numbers. But with that, in taking that into consideration, the stability is what's supporting the businesses in South Africa being able to manage their creditors more effectively.
And I'd like us to just stay with that issue of the bottlenecks, for example, at the ports, because this was a huge one, especially when you think about the impact that it had on some of the businesses as well and the rolling back blackouts. But, you know, this issue of trying to resolve what has been happening at the ports has been quite the big one. We've been focusing on it. How much would you say those efforts have gone to try and free up some much needed, cash and also, free flow for the businesses as well?
Yeah, and it's a very good question. The key thing is the stability that has been created in the third quarter with those bottlenecks disappearing and a simpler, freer flow of stock and materials to these small businesses, especially in the mining, manufacturing and electricity supply component, where it supports the generation, this businesses that supports the generation of electricity. Just two small little things like that. When I say small, it's very big things in the bigger economic scale, but simple things like stable supply of electricity, stable supply of stock and materials in order for small businesses to deliver the services to the companies that they support. Simple, stable supply chains like that support small businesses significantly. And for all the big challenges that's always brought to the fore in terms of what we need to do to grow the economy, etc. Just going back to the simple things, just make sure there's electricity. Just make sure that supply of stocks, goods, materials reach these small businesses. Make sure that the economy starts growing greater than the 1% targets that we've set ourselves. Little things like that will materially change the way that small businesses operate. And then another thing that was very interesting from the numbers is from an employment perspective. Yes, we know employment levels are high. Yes, as the Minister of Employment just said on the previous clip, that it's a type of supply of specific skills that there's short of and that they're focusing on right now. But just looking at post-COVID, what we've seen in the last 2 quarters from a business debt index perspective as well is that these small businesses are starting to employ more people. They've gone through the COVID stage. They've stabilized their businesses. They've learned to operate within the high interest rate environment, and they're starting to gradually employ more people. And as a result, we see more people starting to a growth in employment post-COVID, where we saw it drop to an extreme low level. But just small little things, we see this resilience coming through. Imagine if we can get the the economy growing stronger, constant supply of electricity, the level of job creation and the benefits we can see in the economy going forward.
And it's so heartening, you know, to even hear that businesses are trying to rebuild their teams, because there was a lot of concern about them in this particular regard, as well as, you know, when the COVID-19 pandemic hit. But these, you know, difficulties that you say, these little things that make huge differences are then also needed for them to function, you know, properly. But let's talk about how are they also servicing their debt? Because it's one thing to be hopeful about the future and try to rebuild, but it's another if they're not able to meet some of their obligations.
Yes, and that's, again, a very good point to make there. What we've seen is an improvement in the ability of businesses to pay their debt. Since COVID, we've seen them managing their balance sheet and their cash flows fundamentally differently than they did pre-COVID, in the sense that small business owners, which are in effect the same consumers that buy goods, the drop in retail sales that you just mentioned a second ago, and the positive impact on inflation has an impact on that specific consumer who's also the director of a small business or more than one business. And that same consumer, when they start feeling a relief or an improvement in the cost of living for them as an individual, the business flourishes as well. So when we look moving forward, there's a very, very big focus from a small business perspective on growing their teams and growing the teams with the right skills that's needed, on condition that we can get this economy going and growing stronger. And that's why I said, to repeat myself, it takes small things to make a big difference. And you start that employment cycle. And as we start the employment cycle, we start creating more people in jobs. There's additional tax revenue for the government, and everything starts going in a positive direction. So whilst it looks really good and there's positive signs, we need to not lose focus of the fact, however, that the consumer is still under immense distress. The cost of living, the cost of debt financing, it's still very, very high. Fuel prices going up. The pressure is still there, but the golden little thread that goes through this is it just shows how significantly resilient South African small business and business owners are.
Resilience indeed. Thank you so much, Jaco. Appreciate your time. That was Jaco van Jaarsveldt, Experian Strategy and Innovation Head.